Today's episode is part of our special series with Q2 called The Experience Factor. Over a series of episodes, I'll talk to consumer banking experts and financial institution leaders about how account holder experiences and engagement contributes to long-term success. We'll discuss practical, proven steps to differentiating and growing your financial brand. Welcome to The Experience Factor. Hello and welcome to Banking Transformed, the top podcast in retail banking. I'm your host, Jim Maroos, owner and CEO of the Digital Banking Report and co-publisher of the Financial Brand. Legacy core systems, often decades old, restrict innovation and limit the ability to offer personalized digital products. Traditional rip and replace approaches to modernization are risky, expensive, and time-consuming. Organizations need a solution that enables speed and scale of innovation while preserving existing infrastructure investments. On this episode of the Banking Transformed podcast, Ahon Sarkar, Senior Vice President and General Manager of Helix at Q2, discusses a revolutionary approach to core banking transformation. By combining Q2's digital banking platform, Helix's cloud-based core, and extensive fintech partnerships, Q2 Fabric enables financial institutions to launch modern digital products without replacing legacy cores. The conversation explores how this solution helps banks and credit unions to compete in today's digital landscape while minimizing risk and maximizing ROI. Financial institutions are facing mounting pressure to modernize their systems as customer expectations evolve and fintech competition intensifies. The challenge is that replacing a core can take years and cost millions of dollars. Replacing individual components of an existing core can also be very inefficient and costly as well. The good news is there are alternatives. So, Ahon, can you share a bit about your background and your current role at Q2?
Yeah, sure. My name is Ahon. I'm the general manager of Helix at Q2, which is our cloud native core and banking as a service platform. I helped start that business in 2017, back when banking as a service was not just a four-letter word, it was something that nobody knew about. And so it felt a little bit like we were snake oil salesmen back in the day, but have gotten to kind of grow that through the rise of banking as a service, consolidation inside of Q2, and now really focused on that cloud core space for a lot of banks and credit unions across the country.
So what major challenges in the marketplace led to the development of Q2 Fabric, and how does Q2 Fabric address these pain points?
It's a great question. It's funny. For a long time, we have gotten sporadic questions from financial institutions. Even back in 2017, 2018, we would have banks and credit unions come to us and say, hey, can we use your core for other stuff? And back then, the truth was Helix wasn't really at parity with the majority of cores out into the market. And so we could solve a small problem here, we could solve a small problem there. But for a long time, we said no, because we weren't really prepared for it as a platform, and because we hadn't built out a whole bunch of the functionality that would make it an operational step change inside of the banks and credit unions. So that story played out until roughly 2023. And a handful of things happened all at the same time. One, in that time period, the 5 years roughly, we had dramatically scaled Helix as a platform. And we had gone from roughly 2 million customers to roughly 17 million customers on the platform. We had gone from a savings-only core to one that was beyond parity from a retail perspective. And so we had grown up. And we had formed a team that was prepared to solve for the needs of banks and credit unions. But at the same time, the world was changing for the banks and credit unions that we worked with on the other side of Q2, where rates were higher than ever. Digital competition had increased substantially, where almost 1 in 2 of every new account that was being opened was being done on a digital-only channel, be it a fintech or a digital bank. And so suddenly, for the first time in a while, these banks and credit unions were starting to look at the root of a lot of those challenges, which is their legacy core systems, and starting to ask if there was a way that they could do things a little bit differently. Because, I mean, I'm sure you've heard the phrase that a core conversion is like open heart surgery, right? Because the body is so reliant on it. And I
Oh
cannot tell
gosh,
you how
yes.
many executives
Oh
think that
yeah.
it's the first time I've ever heard that phrase in my life. But that was kind of the known and internalized mantra within a lot of these banks and credit unions until they started to realize that it didn't have to be all or nothing. They didn't have to replace the whole thing or stay exactly the same. They could start picking some of those problems, be it the profitability of their retail portfolio, be it the need to go after a new demographic. And they could solve those problems and modernize their core in pieces. And so what started to happen in the beginning of 2023 is all of a sudden, all of these banks and credit unions, where before we might have gotten one a month, now we were getting 6 to 10 a week that were just reaching out and saying, hey, I have this problem or I have that problem. I use digital banking or I don't use digital banking, but I'd love to use Helix to solve some of these challenges. And it caused us to take a step back and question our own assumptions, right? Because for a long time, we had said, okay, we have focused ourselves as the main core player in the banking as a service space. But what we realized in that moment is that we had accidentally built one of the most at scale cloud cores in the country, that the world had changed between 2018 and now, and so had the priorities of the banks and credit unions that we were talking to. And that today that we were among the best fit to meet their short-term and long-term needs by bringing together our digital banking expertise and our core expertise to give them a flexible stack that could do whatever it was that they needed. And one of the biggest learnings that we've had over the last year is part of what makes Helix and Fabric unique holistically is that no two institutions are exactly the same, right? For a while, people thought, oh, you're going to come in, you're going to launch bank in a box, and people are going to go launch digital brands. And sure, that's a use case. But what we also learned is there are a whole bunch of other use cases. And the reality is a financial institution needs the ability to choose the strategy that is best fit for it and its specialty and its differentiation. And so what became unique about Helix and Fabric was actually the fact that you could use one platform to deliver on a whole bunch of different strategies. Maybe you want to go into banking as a service. Maybe you want to build your own digital brand. Maybe you want to segment your customers. Maybe you want to do a white label co-brand. The ability to, in real time nearly, design a strategy and execute that strategy relatively straightforwardly on one platform is what's really helped that kind of build some traction in the market. So a bit of a long story, but that's kind of how we got here.
Well, it's interesting because in the marketplace today, most of what I hear is either an organization trying to replace their entire core, which really becomes dependent on how many cores did you start with, how many different organizations you have within under the same roof, what are you trying to achieve, and the amount of time and investment money you have, or as you mentioned more recently, the ability to build composable solutions. In a lot of cases, they're saying, I want to bring in a deposit platform, or I want to bring in a loan platform, and they do a part of it and make it work with the existing core to some degree. Mm-hmm. As I understand, I may be wrong, is that the difference with Q2 Fabrics is that the architecture actually does not replace a specific part of the core. It actually runs alongside the existing core. So you're not doing a partial rip and replace or a complete rip and replace. You're doing it based on your goals and objectives for the company and the solutions you're trying to solve for, correct?
Exactly right. I love that you started with, what are you trying to achieve? Because for a long time, people did not have the answer to that question. The answer was, I'm trying to achieve core modernization.
Yeah,
that is not
exactly.
a goal.
Exactly.
That is not a real goal, right?
No.
The goal
it is, but it doesn't solve anything.
Doesn't solve anything. Doesn't do it. Why would you spend a bunch of money to do something conceptual? Like you're going to spend the time and effort to solve a real problem that you have today. And maybe that problem is you can't launch products fast enough. Maybe that problem is it's a pain to operationally run what you've got going on. Maybe that problem is the financials of your current stack doesn't work for a new customer base. Whatever. But there must be a problem at the center of it. And you're exactly right that we took the approach of saying, you are relying on your traditional core for a lot of stuff. And those traditional cores are great partners to Q2. But there are these problems that we are hearing from you over and over and over again. And so how can we have a little bit more of a symbiotic relationship between those two things? And so we set Helix up as a secondary core at your bank, and we effectively automate a lot of the stuff that becomes a headache. Because look, if you're doing a rip and replace, the big anxiety is that we're going to have to do everything different, right? And I'm going to have to retrain everyone on everything. And what if something goes wrong or something breaks? That's not the world that we're in. But when you're in this sidecar world, your question becomes, well, how many people am I going to need to run it? How many people am I going to have to train to bring up to speed on that? How am I going to handle the change management internally? And so what we realized when we were starting to build Fabric is yes, product innovation and all that stuff is very important. But as if not more important is the operational streamlining of the actual solution. So let me give you an example. If I have to go and, just as I do on my traditional core, have someone manually send ACH files to the Fed, that's wasted work. If I have to have somebody go and manually reconcile to my GL so that I can match to my Fed statement, that's wasted work. If I need someone to go through the ACH and card reconciliation one at a time to identify exceptions, that is wasted work. And so as we built out Fabric, one of the things that we realized is, to be successful in a sidecar strategy, you must automate away as much work as possible between the two systems so that the barrier to entry of launching that second system and having it operate seamlessly inside of your existing financial institution is a lot lower.
So it's interesting because as you're explaining it, you're in many cases, because your clients are bringing you things they need to achieve. And we're seeing this more and more. You're seeing a lot of co-collaboration, I would imagine, with your clients, whereby your solution didn't actually answer the exact question they want to solve for, but you work very much like the rest of Q2 does. You're working with your clients to co-collaborate to get them to where they want to go, thereby expanding the capabilities of Helix and Q2's Fabric, right?
You're 100% right. And honestly, the best example of that recently is the one that we did a press release about a few weeks ago, which was Invisint. Invisint is this credit union, and they have a pretty massive prepaid portfolio between prepaid cards, travel cards, gift cards, corporate cards, so on and so forth. And we were telling them about Fabric and how we brought these stacks together and how it's operationally easy to use, and it really brings together the retail banking ecosystem. And they were looking at us like, why doesn't this exist in prepaid? And we were like, what do you mean? And they're like, well, in prepaid today, these platforms are kind of more of silos. It's a little bit more difficult to operate and maintain. It's hard to launch new products, all that kind of stuff. It would be really wonderful if you guys also supported prepaid. That was not something that we had thought of at that time, right? And so we had to stop and say, okay, we are hearing a problem. Few questions. How big is the market? How many other people have the problem? What are the available solutions out there? What could we build that's functionally unique? How does the business model work? We had 2-3 months to answer those 5 questions. And what we came to is that ultimately, there's a pretty big gap in the market where all of these operate in silos and they're very difficult to execute on. It has pretty clear alignment with the rest of retail banking, and they've just been separated because of technological requirements. And we could run them more efficiently and at a lower cost. And so we said, okay, you know what? It makes a lot of sense for us to strategically go and incorporate this as part of Fabric, even if at the beginning of 2023, our first thought wasn't, let's go build prepaid. And it turns out that we had already built a bunch of prepaid functionality within Helix. And so it was just more building on top of what we had built internally. But it was a great example of us realizing, here's a big problem that we are actually probably the most well-equipped to go solve. And either we listen and adjust our strategy and go that way, or we don't ever solve this problem and we miss out on all of that incremental value. And so it's honestly been a pleasure talking to so many banks and credit unions about what their problems have been, because it has taught us a lot about where there are those gaps on the other side of the fence and where we can really help meet them where they're at and solve some of those incremental problems, all while advancing the kind of product strategy of Helix and Fabric at the same time.
So it's interesting. It really is not changing the overall vision of Q2 either. It really works within what's already been built and the way that Q2 collaborates with their clients, but also works with other providers. You know, you mentioned about the fact that Q2 Fabric works with traditional core providers. It works with other partners. It brings other elements into it, as well as all your fintech partners, which really is the way that the solution provider marketplace is going. But it also enables organizations of any size to do what the big boys do. And that's kind of exciting from my standpoint. You know, it gets down to then what kind of leadership do organizations have, as opposed to what kind of technology can be bought or delivered. So what specific capabilities does a combination of Q2's digital platform and the Helix cloud-based core enable overall?
Great question. I'm going to start by making one quick clarification, which is that Fabric today is digital banking plus our innovation studio of like 150 different partners, plus Helix as the core system. So Fabric doesn't work with other core systems today, but Q2's digital banking obviously works with 50 plus core systems, and that's what we use on that side of the fence.
Gotcha.
The thing that Fabric allows us to do is actually control the stack end to end, which gives us a whole bunch of improvements and advantages that are difficult to do if you're designing a system that needs to work with everything. I'll give you what feels like a very small example, but is actually a bit of a larger example. Today, digital relationships are facilitated through this guy, right? On my phone, I'm interacting with my banking app and it's telling me what's going on. And so, in the same way that a conversation was really important in the branch, something as small as notifications and alerting is actually a really important part of your digital relationship with a human being. And so, on the Q2 digital banking side of the fence, we had built out alerting. But a challenge that sometimes exists when you're running it on a batch core, for example, is that they're not really configured to send you events in real time in the way that Netflix or Google or Amazon is. And so what do you do when you have to build a digital banking platform on top of a system that is not going to give you those types of alerts? Well, you can create an alert for anything that you can see. So if you know that you originated an ACH transaction, you can go create an alert for that. And so on the digital banking side of the fence, we had built out a whole bunch of alerts for that type of stuff. But the problem is, now put yourself into your own shoes as a user. What stuff do you really want to know about? Well, I want to know if somebody made a transaction in a different state. I want to know if my direct deposit came in. I want to know if I spent a little bit more than I was trying to spend today. And the problem is that stuff that's happening outside of digital banking, that's happening out in the real world.
Right.
And so Helix is a modern core that thinks about this totally differently. We don't give you a set of predefined alerts. Anything that happens on the system, card transaction, incoming payment, statements, KYC, whatever, generates what's called an event. And so in Fabric, instead of saying, how do we design an alerting system that works for all of the 50 cores, we got to say, how do we design an alerting system that takes advantage of this brand new eventing system? And so effectively, what we've been able to build is real-time alerting systems that can basically be configured to any type of alerts that you want for anything that happens in the entire ecosystem. So if you want to configure for someone doing a transaction in a different state, or for a higher amount, or a specific merchant category, or an incoming ACH, or an outgoing ACH, or a wire settlement, whatever you want, you can go configure a real-time alert for that. And so you might look at that and say, well, Han, you have one version of alerts here, you have one version of alerts here. How much does it really matter? But what I'll tell you with the 17 million customers that are on the platform today is, at the end of the day, if you're building a retail banking product, the things that matter is driving up engagement, bringing down fraud, and building consumer loyalty, right? And actually at the core of all of those things is alerting, right? For fraud, hey, was that you that did this transaction over here? Or should we stop that moving forward? Or in the context of engagement, hey, your direct deposit just showed up and it looks like you have these couple bills coming in, tapping your bank to see a little bit further. Or when it comes to long-term stickiness, like if I know that I have this kind of digital relationship, if you will, with my institution that's facilitated through those, I'm probably less likely to leave. And so what we realized in building out Fabric, that's just one example of real-time alerts, right? Another example is setting up an environment. We can set up a functional environment full, top to bottom, because we control the whole stack in an hour. That was just not possible before, right?
Exactly,
because in order to do that, you must be able to automate the entire build of the entire solution from top to bottom and have that all run. Normally that takes more than a month, right? Just because of how many moving pieces there are, how many interdependencies there are. And so what we're realizing is Fabric is actually a new paradigm for how we get to build these types of products, where we can start thinking about things almost like Apple would, right? Where I'll give you an example. In our bathroom, we have one of those tiny speakers, Apple speakers. And if I'm playing music on my phone and I go and I hover my phone above the Apple speaker, it will instantly start playing on the speaker and in any other parts of the house. The reason they can do that is because they control the hardware, they control the software, and they control the way that those two things interact with each other. And so as we think about Fabric, what we're exploring is the areas where that type of synergy allows us to build something brand new, whether it's a bespoke product for a specific type of demographic, or it is things like real-time alerting, or it is things like end-to-end observability, or setting up an environment quickly, or all that kind of stuff. So again, I know a bit of a longer answer, but I wanted to
but it's interesting because when you talk about it, it's not just what needs to be done today, but it sounds like Fabric really making an organization very agile in being prepared for whatever happens tomorrow. Okay, so I go back to the COVID days when we had the COVID checks going out. We found out on a Thursday that we had to have everything ready to go on a Monday. This kind of technology allows us to be prepared for that, even if it's not in place right now. The movement towards the functionality happens very quickly and at scale.
That's exactly right. I mean, if you wanted to go let's say you had Fabric up and running, right? And now you wanted to go add minor accounts to your platform. That should be able to be set up in a few days, right? That should not take you a long period of time.
Right.
And it's interesting because building Fabric has allowed us to question the whole process. Like, what is work that people should be doing and what is work that people shouldn't have to do? Because, we had our conference last week. It was called Bank on Purpose. And we have a bunch of C-suite execs at all these different banks. And I got the privilege of moderating a roundtable. So hearing a bunch of people smarter than me and getting to ask them questions. And I had a few questions for them. My first question was, how do you think about the future of a branch? And it's interesting because one of we went around the circle and I asked everybody, give me your name, give me your title, give me the financial institution you work at, but also give me in one sentence what makes your financial institution unique. And you would have thought I asked them like a trick question, everyone's like, what do you?
Oh, it is somewhat a trick question.
And of course, everybody's first response was, well, we are member centric and we really care about our customers. And I'm like, yes, I'm fully aware of that. You guys would not be here if you were not in that position. But over the next 10 years, you must have something that customers come to you and they say, you are the best at X, Y, or Z. So what is that? Run around the circle. And for some people, they're really good at running branches efficiently. And so they're expanding branches. For other people, they're really focused on younger demographics. And so it was like an interesting mix of people with different customers and different needs. And the one sentence summary of the future of a branch for them is a branch goes from transactional to conversational, right? And so then that kind of got the first light bulb in my head going, which is, okay, if that is the case, then that means that this must be able to facilitate all of my transactional needs. And that also means that operationally, we must be setting up that branch and those people in that branch to have better conversations. So what does that look like from an operational perspective, right? And then we went and we asked them, how do you think about your differentiation in 10 years? Is it doubling down on your existing core competency? And it's so funny because when I said that, you heard these little chuckles around the table. I was like, what's so funny? And they're like, if we could have solved this problem exclusively by doubling down on our existing core competency, we would have done that already, right? The reality is we actually have to be aware of what is happening out in the market and what we're good at doing so that we can pick the strategy that bring those two things together. And that's when we started talking about Fabric and this idea of having a platform that can execute across strategies. And they're like, that actually solves one of my core pain points, which is that I don't want to have to go find 7 vendors to go do the different things that I have to pull together and then figure out how to stitch it all together. And if I decide banking as a service is my strategy today, and I run that for some period of time, and then 3 years later, I realize that I have a commercial co-brand opportunity, I don't want to have to start from scratch and bring in a third core system and all that kind of stuff. I want to be able to say, okay, cool, now set up a commercial white label over here. Oh, I want to go after people who just immigrated to the United States. Okay, just go set up a new instance of Fabric that has innovation studio partners that are for that specific demographic. We should be able to have that type of platform.
Yeah, and it's interesting because what it does, it gives you the flexibility no matter what happens in the future. So the thing that people are most concerned about today, and it was interesting because I spoke with a gentleman from EY 2 days ago, and I said, what is the core capability that a financial institution needs to have today? Yeah. And a lot of times somebody will say, well, AI and maybe this, and maybe that. He goes, the core capability is the ability to have a flexible enough back office and front office mentality that no matter what happens, you're going to be ready to react immediately. And I thought, boy, that is something you don't think about. But when you just look over the last 4 years, the different things, we thought that COVID was the big aha moment that said, there'll never be anything like that again. And then we got in the economic crisis, said, oh, this is a whole lot worse than COVID was. COVID was a delivery issue. This is like functionally, how do we do things in a more economic and efficient way? So, speaking of the integration of a lot of different elements and especially talking about experience, but more importantly, engagement.
Yeah.
One thing Q2 has is, as you mentioned earlier, about 150, if I'm not mistaken, fintech partners that somebody can latch onto or not latch onto. How does Q2 Fabric actually help in this integration?
Great question. So that collection of partners is what we will call the Innovation Studio and Marketplace inside of Q2. And for those that are unfamiliar, it's basically a whole bunch of different fintechs that offer different functionality from credit checking to retirement services to currency translation, et cetera, to small business tooling that your consumers or your small businesses might need. And what we have found is in the few years that we've had that ecosystem, already banks and credit unions are basically picking and choosing functionality that is relevant for their customers and integrating into digital banking to make that function. As we were building Fabric, which is this full stack, right, front to back, we realized, and honestly, it's part of what is interesting about the name Fabric, right? Fabric is like everything and nothing at some level. When you're wearing Fabric, I'm wearing Fabric. They look wildly different, right? Because we just chose to wear different things this morning. But foundationally, they're probably made of the same stuff, right? Probably made of cotton or linen or polyester or what have you, right? And so as we were doing the initial research for Fabric and understanding what is the actual problem that we're trying to solve and kind of coming to this omni strategy concept, what we realized is that let's say two different institutions both want to build a digital brand, but they want to build them for totally different users. One wants to build it for people who are 55 and up, who don't really have a good solution out in the market and have actually a surprising amount of needs and of deposits. And on the other side, you have someone who wants to build it for new immigrants. Some things they need will be the same. They will both need a deposit account. They will both probably need to be able to save. They'll both probably need to be able to do ACHs. But some things are probably going to be wildly different, right? The aging population might need estate planning. They might need information security. They might need legal services. They might need more robust wealth management because they've had the opportunity to build wealth. A brand new immigrant might need currency translation to send funds home. They might need credit checking so they can start building their credit. It's just wildly different needs. And so the other thing that we realized is, gosh, if every single time someone wants to build something unique into the platform, we have to do development, we will become the bottleneck to our own success immediately. And so we needed a way where you could go and personalize or embroider or whatever you want to use your Fabric however you want for your specific use case with one platform, right? Fabric is, there's only one version, there's one platform, we update it every 2 weeks. And so we needed to build it in a flexible and extensible way so the people who were going after the immigrant population could build a differentiated proposition that included those functionality. The people who were going after the aging proposition could do the same, and they could both launch in a pretty short amount of time where they didn't have to go pay somebody to go and develop all that functionality. And if down the line they decided, hey, here's this other functionality that I want to bring in that's not part of the ecosystem, they could just have that vendor go and integrate to our SDK. And then not only they, but also others on the Q2 platform could kind of benefit from it. So to answer your question succinctly, Fabric integrated in the whole innovation studio to allow people to bring in differentiated functionality to solve their specific strategy without having to take on a bunch of cost or development work.
So we've been talking about the personalization of products and services for your clients.
Yeah.
Let's dig down another level to how does data and AI work within Fabric to improve the ability to deliver highly personalized banking experiences to the individual consumer?
So let's break it into pieces. What does data do? What can you do with data to run your business more efficiently? And then what role does AI play now and in the future? On the first one, the unsexy work of financial services is taking your data set and turning it into something that is functionally consumable and actionable. And that alone was a 2-year initiative for us to cleanse our metadata and get our data in a good spot. But today, and you can see it in our public docs, all of the information that is pulled out through Helix is in a consistent, readable format. That was piece one. And we have built on top of that data new forms of reporting that have not existed in the past. So like in the past, you might be used to either a stock set of reports or going to your core provider and saying, hey, could I get this report, and paying some amount of money and waiting some amount of time. And now you get that
I remember that world. Yeah.
Yeah. And then you do that every single time you need a report. Or you take the raw file and some poor schmuck on your team is sitting down and pulling up SQL and trying to figure out how to parse through all the data to get to where you need to get to, which also means that you need to constantly hire people that can do that. So we said, okay, data is the data. What do people want to do with the data? They want to understand trends. They want to understand usage. They want to figure out where to apply their efforts to generate the most value for their institution. And the problem that they're having is that either they can only do that by asking us to develop something new, or they have to hire deeply technical talent to be able to go do that stuff. Neither of those are acceptable. And so what we built is effectively ad hoc reporting on top of our existing data set. So today in Helix and Fabric, you can go in and you can go type in what it is that you want to go see in a report, and it can go through the data that's been loaded into it and create that report on the fly. We're in the early adopter stage of that product, but I'll tell you already, for people who are used to the old way of operating, being able to just think of a question, come in, type it out, and see that with your data set has already been transformative.
and it's interesting, just on that point,
Please.
that capability is not usually very accessible within an organization. I mean, I remember, as you mentioned earlier, the going to the data department saying, "I need this,"
Right.
or and to find a partner who can actually get you there quicker, especially if you're, for instance, in a marketing or product development space that does not get first priority with the IT department, no matter what happens.
And who's not technical? Like your marketing person should not know SQL. Like that should not be an expectation.
It'd be great if they did, but it's not going to happen. Exactly.
Well, you have to pay a lot more. But yeah, I mean, it's interesting, right? Because kind of underlying in the whole Fabric philosophy, the whole Helix philosophy, is instead of just building one-to-one parity to what exists in the traditional core systems, we're asking the question of how should this work? Like, what should this look like? You know, should it be that you have a bunch of stock reports, or should it be that you have the ability to make the report that you want to answer your question? You know, and should it be that you need technical experience, or should anybody who can Google basically be able to come in and pull those types of reports? So anyway, that's the data side. The second piece is, okay, now I've understood my population. What do I do about it, right? And the interesting thing that people forget about personalization is that, hype aside, personalization is actually the linchpin between engagement and fraud, and affecting those two without hurting the other one, right? Because it's funny, like you can make your engagement go up tomorrow if you said that you have instant funds availability across your entire platform, but I will guarantee you will lose a lot of money, right? Because people will figure that out. It will go to a ring, they will pull out all the funds, and you'll be left holding the bag. On the flip side, I can guarantee you have less fraud if you made your settlement timeframe plus 5 days, right? And you added in, onerous limits, but everyone would stop using your product, right? And you would lose a whole bunch of money. And so what we started to realize probably around 2019, 2020 is that if you don't think of your customers differently and apply different rules to them based off of the types of customers they are, you will never be able to have your cake and eat it too. You will never be able to drive up engagement and bring down fraud simultaneously.
Right.
Because the reality is your retail customers probably fit into 3 categories. There are your super users who generate most of your revenue and most of your value. There are the occasionals that use it for some specific use case or are auditioning it to be the primary use case. And then there is everybody else, which is where probably 90 to 95% of your fraud lives. And so once you have this incoming data, what Helix and Fabric allow you to do is personalize the product offering to the different segments of customers that you have. And so it even applies to something as simple as when you choose to ratchet your rates. Let's take 2 consumers. One consumer that has $10,000 at your bank and $50,000 somewhere else and is really using your offering, and one consumer that has $1,000 at your bank and probably nothing anywhere else and is not necessarily using your bank. If you wanted to increase your rates to try and bring in more deposits, increasing the rates for the second customer is actually not going to do anything other than lose you more money, right? Because there is no new money to bring in and they're not going to use your platform like that. But increasing the rate for the first person might convince them to move that money from that other institution to your bank. And so net, taking data and applying it in personalization through the core and the digital banking front end is the secret to driving up that engagement and bringing down that fraud, which is the secret to the profitability of your retail portfolio. Lending aside, of course.
Yep.
Last part of your sorry, go ahead, please.
No, go ahead. You're right.
The last part is on the AI piece. And to be honest, there is what we are doing today, and then there is what we will be doing moving forward. What we are doing today, we spent the last year and a half testing out a whole bunch of different things. And there have been some truly aha moments, even internally, where, for example, we needed to go document a whole bunch of the jobs that we had built out internally. And we had roughly assessed that it would take this team 2 weeks, which would have cost roughly $200,000 to go through this whole thing. We asked AI to document those jobs internally because we use Azure, and so we get enterprise connection to that. We did it in about 30 minutes. And then we had a couple of people go through and cleanse that over the course of 1 to 2 days, and we were done. And then that team could go work on something else. And so already AI has been transformative in the making of the work.
Right.
But then the question is, okay, what about once the product's out in the wild, what role does it play there? And I'll be honest with you that we are in the nascency of what that looks like. But to me, there are levels to it. The first client to me is the people who work at the financial institution, because you are the ones that are using the platform every single day.
Right.
And it turns out at that roundtable I was telling you about, I asked the question, I basically introduced this concept called the threshold of urgency. Because the thing that I've realized is every single bank CEO that I talk to is like, we got to do this. But what I've kind of intuited is until they cross an internal threshold of urgency, it doesn't matter conceptually what they believe in. The pain is not bad enough to justify the investment and the effort and the change management, et cetera.
Yep.
And so then the question I asked them was, well, what is the thing in your organization today that gets you over that threshold of urgency? And half of the table was like, you know how many different systems my team has to go between to do the most basic stuff because all of these systems exist in silos?
Yep.
And that was eye-opening because obviously one part of our strategy has been consolidate as much into the Helix console as possible, automate as much as possible. But there are some systems that live on the outside. And so what we started exploring, and I won't kind of give the full preview until we're a little bit later on, but we've started exploring as well, what if you had an assistant that could help do some of that for you and that showed you everything that it did so that you could validate it as a human being and feel comfortable with the output, but you didn't necessarily have to go between 6 different consoles to go do a fundamentally basic task. So from a human perspective, the question that we're asking is how can we take the 20% of time that you're spending on stuff that you shouldn't have to do and give it back to you so that you can help transform the bank from transactional to conversational? The last thing is just AI for the customer, which is, I think, again, still in its early days, and we have to be really cautious because it's financial data and people's livelihoods, et cetera. But I do think that in the long run, you'll see AI play some roles insofar as helping you manage your bespoke financial life with the context that you currently have, taking on small jobs that you don't necessarily want to do yourself. And it will likely be an interaction model for things like disputes and whatnot in the longer run. We're just barely scratching the surface on that front.
Okay, so let me have you give me, a typical client engagement where they want to fix X.
Sure.
And it can be anything. It can be on the deposit side, the loan side, anything else. And then after that, nothing that's a one-dayer, but after that, give me an idea of how long it takes to deploy your solution against a need. Let's say I'm trying to fix my new account opening process. That's a typical challenge that organizations have, or they're trying to modernize their deposit platform. You can give me what you think is a good example of what's happening a lot at Q2. And then how long does it take to actually deploy this?
I'll split those two questions. On the first question, I got good news on the new account opening side, which is that we realized what a pain it is to go and try and solve for every version of that. And so we said, okay, well, why don't we just build out a 3-minute onboarding experience that is at parity with what all of our fintechs do? And so that's baked into Fabric at no additional cost. It is a part of the platform. And so whatever you end up building with Fabric, you will get that 3-minute onboarding process. We'll put that to the side. Well, let's take an example. I won't name names. This credit union does a lot of different auto loans. And the problem they have is the best practice that they have had for almost a decade is when you issue an auto loan, you also open a deposit account for that customer because you want to build that relationship.
Yep.
Well, fast forward 10 years, and now 40 to 50% of your deposit base or your customers who you want to maintain accounts for have really low deposits, have no kind of functionality that's meeting their needs.
Yeah.
Right. Yep. And you're like, well, I don't want to close their account, but I'm also losing a ton of money on those accounts. What do I go do about it? And so this institution approached us in the beginning to say, hey, I'd like to take this 50% and segment them off onto this digital only stack where I can meet their needs at like 30% of the cost. So that's kind of where we started. Then we did what we call like the operational deep dive, where we sit down with the team that actually operates this kind of thing and we understand their problems a little bit deeper. And we learned in that process that there was a second problem, which is that they wanted to expand into a new geography, but they didn't want to buy a branch quite yet. And they weren't sure which of 3 adjacent states they should go into first. And they had a budget, they had $1 million to go spend on marketing in those areas, but it's way more than $1 million to go buy a branch, right? And so the problem they were trying to solve that they didn't initially think was part of the same thing, but the problem they were trying to solve was, how do I test out a new geography without buying a branch to have a good sense of which one I should really double down on in the subsequent year? And so we said, why don't we just solve both of these problems at the same time, right? Why don't we go build you a digital only stack that you can go deploy in different geographies with different messaging and different, endpoints or incremental functionality, and then solve your segmentation and economics problem, and then also solve your market testing problem. Something like that, which would be debit card product, checking product, savings product, and Innovation Studio components plugged in, probably take you 6 to 8 months. End to end. If you wanted to launch just savings, so we have another customer who's basically like they are I would say a mid-sized bank, but globally they're a larger bank. Their existing demographic of customers that are first-time immigrants from specific countries has been tapped out. And today they are mostly trading customers with the other big banks in that universe. At the same time, their lending base is growing dramatically. And so their CEO is realizing, if I don't figure out a way to cover this deposit shortfall, I'm going to be paying a premium for them forever, and that's going to really hurt my NIM. So I need a separate deposit strategy because my existing base is tapped out. And so he's like, well, I want to build something for the kids of my customers, because once they age out, all those are going to get transferred to the kids, and I want to make sure that I'm resonant with the kids. And so he wants to start with just a goal-based savings product, right? Because he's like, a lot of these kids are just trying to save, either going into college or coming out of college for their first job. Something like that we can launch in 3 to 4 months.
Astounding. I'm sorry. I come from the old world of banking, and I'm actually meeting with an organization that took 10 years to replace their core.
Right.
And mind you, it is modern core. They're not going to have a lot of the challenges other organizations are going to have.
Totally.
However, we've got to do our normal daily business at the same time we're replacing the ways we do it.
Right.
And this is a lot better. So from a visionary standpoint, I mean, you've been working in this world for quite a while, and Fabric evolves basically between today and tomorrow. Is going to evolve in a different direction or additional directions. How do you see the evolution of core banking actually evolving? And what do you see the future of Q2 Fabric being?
Well, just small questions. Let's take the first question. Any executive that you talk to today is going to tell you, if you push them hard enough, about all of the different problems they're dealing with. And if you're savvy about the space, you will be able to trace 70% of them back to their traditional core. And when you bring that up to them, they will acknowledge it. They will acknowledge that a lot of those pains come from the intrinsic realities of the system that they have been built on. But they will also tell you that it's a tough choice to make as the CEO of a bank to move on to or add a different system, because you know that it comes with a bunch of work. And, it's funny. It's not unlike my own relationship with working out. Because look, I know I'm supposed to work out. I know that if I work out, it'll make me healthier. I know it'll help my heart. I know it'll help me do the things I want to do with my family, so on and so forth. And yet, Tuesday, 6 p.m., I look at the door. I could work out. I sit on the couch and I watch TV, right? And it all comes back to that concept of threshold of urgency, right? What gets you to that place? And, for me with working out, it was like a medical condition, right? Where I was like, okay, now I don't have a choice. Like, I either do this or my life is going to get way worse. Yep. Exactly, yep. Right? And so I think the core space is kind of similar, which is that I think all of these institutions realize that the problems that they have, be it product creation, be it going after new markets, be it hitting different strategies, be it making their operations more efficient, be it being more profitable, all of them are coming from that rooted place. But the decision trade-off between solving that problem and every other problem is ultimately incumbent on that threshold for urgency. And so what I think you will see, and I'll kind of break it into phases. The first phase is I think you will see these early adopters who are already feeling these pain points. Take that customer whose existing deposit base is tapped out. They've realized that any incremental thing that they do in that space is not going to solve their problem. Like, they need to go after a different base, and it's a great way to try this problem. So they cross that threshold. So in the first few years, you will see these people who are past this threshold because of some idiosyncratic factor in their business, take it on and start to drive some success. And you will see the rest of the industry looking to those people to see how it went and to see if they fixed the problem. I think in the long run, I mean, you're already seeing some traditional players start to expand into the modern space as they realize that the only way to evolve is to change. But you're also seeing new entrants enter the space and try and compete in the same way that we are, in the sidecar fashion, where it's like, let me play nicely with the traditional core because we can actually help each other. Like, you can handle this piece of the business, we can handle this piece of the business, and together we can kind of grow. But I think the thing that has brought the cat out of the bag, because I think you could also ask, why did this happen 8 years ago, right? I think the thing that's really brought the cat out of the bag is that evolved macroeconomic climate and evolved competition in the retail space, where that answer that everybody at the round table gave me of, well, we're member-centric, that is going to stop cutting it over a period of time. And that's uncomfortable to think about. It's uncomfortable, but that is the truth. And so once we get past that first phase, we're going to start getting into the second phase, where core transformation becomes a necessity to meet the objectives that you have promised to your board or to the public markets, which is to say, there will come a certain point, especially as digital competition continues to grow and availability continues to grow, and all of those are building on more modern platforms. There is going to come a point where public markets are going to expect improvements in the way that you deliver product, in the way that you run your business, in the way that you expand your business, that people will realize are only possible by going to the gym, right? By evolving their core platform.
Yep.
And that will push a whole crop of people past the threshold of urgency because there is no other option. And there are comparables for them where they can go look at these businesses and see. And then the third phase, I think, will be the people who are playing catch up, right? Where they're realizing that they're falling behind their competitors who decided to go onto more modern platforms and are able to run a lot faster. And they'll have to figure out how to catch up while also going backwards to build new systems. So long journey, probably going to take the next decade plus, but an interesting journey that I think we're starting to see the beginnings of. And in that context, there's like, what is the future of Helix? And there's what is the future of Fabric? For Helix, we want to solve more and more of those problems and help our partner banks, our partner credit unions, and our partner companies on that overall digital transformation. From a Fabric perspective, what we're really trying to do is build the Apple of banking, right? Where you have the best-in-class front end, the best-in-class back end, and this ecosystem of apps that you can go and use to go do whatever it is that you want to do, so that banks and credit unions can spend less time figuring out how to tactically execute something and spend more time building that relationship with the customer, defining what their strategy is going to be, understanding that core competency, and to your point, adjusting as the winds change so that they can kind of grow their institution.
Great answer. And it really gets down to, and you brought out the whole concept here and put good fabric around it. Is that overall it's about building resilience, and it's something that's becoming more and more important. Boards are requiring it. The industry is requiring it, and those organizations that have leadership that realize they've got to go beyond what they've done in the past to become a bank of the future. It's not about innovation as much as about building resilience where you're prepared for anything that may happen. There's been a lot of surprises. We've all survived them for the most part. But the reality is that's not going to continue because the marketplace keeps on moving faster than we are. I in my podcast often I talk about the engagement level and the interaction level of just an Uber app versus my typical banking app. You take any mobile banking app and they all look basically the same. They all have the same functionality. They all even have the tiles laid up in the same way.
Right.
That is not resilient. That is not falling too far behind, but it's not being ready for what's going to come next, that organization that's going to eat your lunch. And I think what you've done at Q2 and what Helix has done and Fabric has done is really made it so that your clients can be prepared for the unknown, can build something at scale and at speed that wasn't possible before without having to deal with the question, how do we fix the whole thing at once, which is not feasible anymore. The good news is, is that organizations like Q2 and people within those organizations have made it so organizations of any size can be ready for the future, can build engagement instead of just experiences, and can really deliver innovation in an instant, for lack of a better word, in a much faster role than you've ever been before. And I think, I'm going to speak on your behalf here, but the thing that gets in the way are bankers. The realities of technology, the innovation mindset, the partnering capability are all there. The difference is some organizations decide to move forward while others kind of stand still. And that's a frustration at the world. I know you see it. I know I've talked to the people at Q2 and many people just say the same thing that, we kind of know within the first 10 minutes of a meeting whether or not this company is going to buy, but more importantly, if they happen to buy, are they going to succeed at this pace, at the pace others have done? And the reality is to your workout question, we've got to feel enough urgency to say we're going to do things differently and we're going to accept change. And to make that, you mentioned the 3-minute new account opening experience. I bring it up I think every podcast at some point. You've got to let go of that driver's license being the key element, because you're at 7 minutes as soon as you say,
right,
I want to do exactly what you said you want me to do, but I have one qualification. I got to use the driver's license. You go, you can't get there from here then. It's like, if you don't put wheels on the car, you're not going to go down the road as fast. You've got to do certain things to make this all happen. Ahon, thank you so much. This has been a thrill. I wish you brought some passion to the podcast, because you're kind of that low key guy that doesn't have any enthusiasm behind what he does.
Someday,
but loving to think that we'll get together in the near future and go to a concert or work out together, one of both.
That sounds great. Hopefully the first one.
Yeah. Thanks a lot.
Appreciate it.
Thanks for listening to Banking Transformed, the winner of 3 international awards for podcast excellence. If you enjoy our work, please give us a positive review. In addition, check out my recent articles on the financial brand and our fantastic research for the Digital Banking Report. This has been a production of Evergreen Podcast. A special thank you to our senior producer, Leah Hassage, audio engineer, Chris Fafalius, and video producer, Will Pritz. I'm your host, Jim Marous. Until next time, remember, it's impossible to build an exceptional customer experience or engagement without modern digital core technologies.